Is Warren Buffett down on the market? The market's definitely not down on Warren Buffett, as Berkshire shares near new highs above 350. They were up more than 2% today after earnings, and a pretty strong move out of obviously the A shares and the B shares, but quoting the B shares given the higher volume, greater accessibility to everyday people who don't have thousands and thousands of dollars to buy one A share. And what I mean by a strong move out of Berkshire Hathaway today is to say that it was up around a percentage point this morning when the stock market opened. It was honestly kind of unchanged. It was nothing really to write home about. Built-in strength throughout the day. And I mean, even as an example, I wrote this when it was up 2% this afternoon around 10 or 11 Central Time. And by the close, it was up more like 3 or 4%. And so really continue to build and build and build from the open to the close. And now nearing those all-time highs just north of 360. I'm pretty sure they closed around 360 here today. But some interesting things, as always, this is such a weird stock because it's a holding company, right? They hold a bunch of other stocks. The weightings right now are very, very interesting. And of course, honestly, maybe more than any other CEO of any company, any other leader of any single stock, any company, private or public in the US, the market really dissects what Warren Buffett has to say and what he's been doing as well. Now, here's the most recent portfolio weights from CNBC concerning Berkshire Hathaway. Apple shares, as you can see there, 45.5%. And that makes sense then that you would see Berkshire Hathaway, one, report good earnings, and two, be looking at potentially new all-time highs because Apple has been steadily trucking through all-time highs over there, although they've been off a little bit since earnings last week. Other pieces of this, though, that are worth noting is the rest of the top weights in here: finance stocks, energy stocks, and then, of course, the classic Coca-Cola and Kraft Heinz, which have been large components for Buffett for years and years and years, especially that Coke piece. And these are more value-oriented companies, and a lot of the gains as well that were reported from Berkshire were based on interest rates, big key drivers, as well as insurance companies helping out here this quarter, which starts to tell you either a good or a bad thing about the general economy or where Berkshire is set up, what that might tell you about where Buffett thinks the economy and the stock market is headed. Also worth noting is the cash part of the portfolio grew substantially. It grew 17 billion as the cash part of the investment portfolio essentially it continues to get larger. You would imagine that, what does that mean? He's parking more money on the sideline, maybe in anticipation of, one, not being attracted to stocks at these prices, maybe thinks that they're overvalued, or two, just has kind of a general fear when portfolio managers funnel portfolio money funds into cash. They're not necessarily saying, oh, we think this US dollar is going to rise by 20%. It's more of kind of a safety play of, we're usually, let's say, for example, operating at 99% stocks or whatever our investment are, and just 1% or less in cash. If that grows to 2%, 3%, 4%, that's kind of a fearful play relative to the stock market. And I believe he was quoted in a statement for this earnings cycle that, didn't necessarily like some of the value, didn't think that there was good value to put more and more of this cash to work, and so was a net seller of stocks for this quarter. And he might think, I mean, you look at Apple, even the largest portion of this portfolio, and I mean, even if you are the most growth-oriented investor or just, viewer of the stock market, you see this blowing through the all-time highs here, the resurgence, not only the resurgence from the 2020 pandemic, the early onset of that pandemic in March and April. Apple came roaring back from that. But then you look at the lows that the stock market put in around inflation fears at the end of last year, start of this year, huge resurgence through all-time highs again to being up. I believe Apple was up at one point about 50% here this year. That would make sense, right? From January near 120 all the way up to almost $200 a share. They've backed off a little bit there at Apple. But yeah, the fact that Buffett sold more stock in this quarter than he bought tells you that, wasn't very incentivized to buy stocks at this price, which would lead you to believe that he thinks there's maybe some downside in the market. And also stock repurchase slowed in this quarter as well. And you also look at the fact that there was, growing growth from Berkshire around interest rate companies, and a lot of I think they've seen historic highs in operating income for the company this quarter, higher than they've seen ever historically. A lot of that to do with high interest rates. If he's positioned to make money off of high interest rates, that means that he thinks that interest rates are maybe going to be higher for longer here, which is maybe not a good thing for some of those tech stocks at the highs. And so while this is, a great short-term story for the S&P 500 that has considerable weighting in Berkshire, a great short-term story for Warren Buffett and his portfolio, obviously doing as good as it's ever been near these highs here, could be an indicator of a slowing economy given the interest rate oriented investments and how higher interest rates could slow down the technology sector that is so prominent in the stock market. And also the greater cash holdings and the net selling versus buying of stock in this quarter tells you that Warren Buffett maybe isn't so hot on stocks at these prices.